Hello traders, this is FreeFX and I'm Francesco, and today I'm going to talk about a number of things. First, a disclaimer. And the disclaimer went too quickly, so it is again. Okay, so Euro USD versus Euro TRY, which is the Turkish Lira. This is a particularly interesting combination, so I'm just going to Euro USD and Euro Turkish Lira, TRY. This is a particularly interesting combination. And so I've been trading the Euro TRY for a few years. I started because I was kind of disillusioned with majors, and I wanted to try and find something to experiment, literally, with the carry trade as a spot FX opportunity. And of course, the carry trade is something that institutions do in a different way, and also corporations or businesses to hedge when they have to trade with foreign currencies. And so if the cost of the goods goes up, they can hedge their loss with the carry trade, for example, or you might also do this as I said, as a kind of speculative bet. Essentially, the best carry trade for institutions works where you are relying on an interest rate differential between two countries on the currency, and the value of the currency pair, the exchange rate, doesn't fluctuate too dramatically. And those exchange rate differentials make the holding a bet on that differential to continue worthwhile. So if you have a 15 or 20% devaluation of a currency, and you are buying that currency because of the country's interest rate being higher than the counterpart, then you know your essentially your profit is going to be much diminished. So something like USD JPY, the Japanese yen carry trade in the 90s, was great because Japan kept devaluing its currency, and so the differential with the US dollar made it worthwhile. So there needs to be enough interest rate differential to kind of counterbalance fluctuations in the currency pair. And also you need to be able to have the funds to fund a carry trade to really make it worthwhile. For spot FX traders who rely on the actual speculative bet of the currency pairs pip transaction, so how many pips the pair moves, and your trade is on the pips, not on the currency carry, that is quite tricky, because you need to find a pair that has enough of an interest, overnight interest paid to you for holding in the direction of the positive carry to make it worthwhile. And then you have to have leverage to leverage up the gains. So the bigger your size of the trade, say 1 million or 100,000, etc., the bigger the overnight interest paid to you. And some brokers don't really pay the same interest, and that's the other thing. And some brokers don't make that very transparent, so you don't actually know what you're getting. I used FXCM on demo for doing this, and they advertised their overnight swap rate, as it's called, or rollover costs transparently on the currency rate quotes. So you can see that as it changes, and it will change through the day sometimes, or certainly from day to day. Also, you've got things like you don't get that paid to you every day. Some days are no carry days, so to speak, and then on Wednesday you get it triple. You get a triple rollover because it pays for the Friday, Saturday, Sunday. So there's something called well, it doesn't have a name, I don't think. It's called the triple rollover setup or strategy, where you enter a few minutes before the end of the trading day, and you get the triple rollover, whether you lose or gain, because it's only a few minutes from the end of the trading day to the start of the next. So even if you have fluctuations in price, you don't use a stop loss as such. You bank on the carry that's paid to you. So that way you don't have to kind of incur the risk of huge fluctuations and getting stopped out or losing a lot of money because it's unlikely to move, statistically that much within a couple of minutes. So depending on how quickly your broker pays that rollover, which is the other sort of practical implication, you could, in theory, all going well, with all the right setups, have a 5-minute carry trade with a triple rollover, but a huge bet in terms of size, and just earn from that and not worry about the daily fluctuations. So I put all that introduction to say that I've been experimenting with that, and I managed to accrue over just about 2,000 in terms of currency units on interest alone, but that was going against the actual trend of the currency pair, and it got to the point where I realized that the trend wasn't going to stop anywhere. So I came out at a loss and closed that account, and I started a new one July of last year and traded it quite differently, and I started trading Euro USD, which is how I got to currently it's 121% profit. That's the demo account. On the live account, I'm at 54%. That's the live account, which I started in May of this year. I haven't really traded Euro TRY on the live account because it's not the same size account, and I'll explain why I haven't done that. Trading, so let's start with, so I was looking for a currency pair that would give me a lot of leverage in terms of the swap rate, and Euro TRY provided the highest leverage in terms of that, and it was above all its competitors' tradable currency pairs of the exotic group, Mexican peso, South African rand, ZAR, and the Swedish currency pairs, and the Chinese offshore yuan, CNH. I really thought I found a sort of gold mine because the interest overnight accrued very well, and so you can see from this chart. So the red here is the currency pair spot rate. You can see, and everybody who's followed this will know that in basically August of 2018. The currency pair went sort of hyperbolic, coming from a 10-year, I'll show you the whole caboodle there, a 10-year trend. You can see from 2008 to 2018, it's just been steadily going up, which meant that the lira, conversely, had been steadily depreciating over 10 years from 0.50, and this the highest level here. Sorry, that's the wrong one. It's the one on the right, from about 1.90 to this, which is 7.56. That's a huge valuation, and but from this point on, from August, this is where one of my accounts went bust essentially. I then started selling, and it sold very well from that level all the way down to here. You can see quite a huge depreciation. So the lira started sort of, the bank intervened, and then there was a kind of a forced revaluation of the lira. So that kind of allowed this sell-off. Because this took from August to late 2018, about 3-4 months, I accrued a bit of carry there, and then I continue holding that sell, and it was doing very well, and then sort of I think around this point I started going, well, this is not going very well, because it started appreciating again. So that account, I sort of closed it then. But the lesson there was that the carry trade on this pair only worked once, because that's there. And it hasn't really sold off since. In fact, it's regained those losses, and it's actually gone even higher. So we actually are at all-time highs since the data begins here in 2018. That's 12 years of essentially of appreciation. So unfortunately, if you hold this currency overnight, the brokers that provide you that will punish you for doing that, because it's a big the rollover, the negative rate for holding a buy position on this currency overnight is much bigger than the one that you get if you sell on the positive side. So it's not worth. You have to really hold on long term. If you look over 2-3 days and you don't make enough gains, you get punished from the negative rollover. So you have to really think carefully about that. However, what's interesting about this currency is that it is very expensive to maintain in terms of margin maintenance requirements on a daily basis. You've got for buying this pair, you've got to take into account the swap, negative swap, and also the per pip value is very small. So you earn a fraction of what you'd earn from your USD. Of course, if you're a lover of trends and if you bought this here and just held on to that, you would have had big returns, but you'd have had to have a crystal ball as well, because around this time as well, there's a lot of wild swings in terms of swap rates, and also when you get to all-time highs here, we've had negative rates on both the buy and the sell side. So, and the other thing is the spreads are quite considerable. Sometimes you get 200-300 point spreads, sometimes more. So if you're doing intraday, it's not worth your money essentially. But obviously, if you're holding on, then yes, because once you're in a position, you recoup that spread, even if it's 300 points or 600, and then make up gains. What's interesting about this currency as well, and by the way, you don't really get volume figures like for CME futures, because the CME futures data for Turkish Lira is very scant. What you do get is the MSCI Turkish ETF on Yahoo Finance. This provides you with volume data, and if you get that, then obviously you've got a bit of something to go with. I'll just delete that. It's not really worth it. And if you go by the daily, you'll see. So that's the volume there. I would probably go down into the daily. Do a 6 month. There you go. Okay. Now that's the volume there, and so you can see that there's been a lot of buying and a lot less selling. And if you go back to the 2018, where it all went wild, you can see that it was that was the August 2018. You can see that huge drop. So this is inversely proportional. So it's a mirror version of the Euro TRY or USD TRY. So when this index goes down, this is the index of all the major companies in Turkey. So it represents a huge mirror to the currency. So when this drops considerably with huge sell volumes, you can bet that the Lira is going, that the USD TRY is going the opposite way. And indeed, it follows the same line as the Lira, but not of the currency pair, that it's the opposite. That's what I was trying to say. And so this is one aspect that you can use, but because it only trades on limited hours, so you need to, if you look at the hourly, you can see that your day starts here, 9:30 and ends at 3:30. And you need to add 5 hours to that. So that would be 2:30 p.m. in the UK. That would be 8:30 p.m. So it's 6 hours of trading that you get. So you don't get the time before that, so the European Open equivalent of 8:30, and you don't get the later hours. But even so, those kind of, 2:30 represents like the peak time, because you got the US Opens, the European overlapping. It's a good place to know what's going to happen for the rest of the day. So it's has its use. So you have that to use. And the other thing I was going to tell you about is the line in pink there. Essentially, is the USD TRY. Now you can see that almost perfect correlation. They are almost indistinguishable. I've used the monthly because this shows you the other thing, which is the correlation with the Euro USD, which is non-existent. You can see that Euro USD was in a huge downward trend there, and this was rising regardless. And then here, this was spiking up. The Euro USD was going down. More recently, there's been a divergence, and I'll show you that because it's been of interest to me, and it's here. This divergence is here. So you can see the USD TOY actually dipping or almost leveling out, and the Euro TOY crossing that line and going the opposite way, rising. And you can see the Euro USD is rising in parallel. Now, if I make that a little bit smaller, I'll go to a daily, and you can see that a bit more clearly. So essentially, we've got the Euro USD there, okay, and we've got the USD TOY. You can see that this is kind of leveling out, and this is rising. If I take that out completely, here are the two, and just make sure we've got the same kind of scale for both, which is the regular scale. Yeah, that's fine. So this kind of gives me an idea of that's one. This is the other. Just make it less flat. There we go. Okay, that's better. All right. So you can see that they were kind of going in different ways, and now they sort of started following each other about here. So from about June, there's been a steady kind of increased correlation, positive correlation between the two. So as the Euro USD is rising at the moment, you really have, if you have confidence in the Euro rising, you can follow the Euro USD's movement upward of 114 and bet on a rise in the Euro TRY. The bank, the central Turkish bank, has been unsuccessful in stopping this rise. And essentially, you've got this kind of level here, which has gone through the 7.80, which was like an all-time high. And so if you want to buy Euro USD from 114 up, and you're confident that's going to continue higher, you might also want to think about buying Euro TRY, although obviously at this point it is historically overbought, and it makes you wonder how long it will stay there. But so the reference point here is obviously you've got the Turkish Central Bank. So here's the Turkish Central Bank's calendar, and you can see that you've got the Monetary Policy Committee decisions, so interest rate decisions coming up, and that's in the next 2 days, the 23rd of July. So that would be something to keep an eye out on. These do have a consequence. The 25th of June decision, for example. There's your 25th of June, if I just find it there. 25th of June was here. Okay, so yeah, so in this case, there wasn't really much of a correction, but other times there are. But you can kind of start kind of mapping out where. So if you look back to, for example, January of 2020, let's say, back to January 2020, which is around here. Okay, so the interest rate decision there was the 16th of January. Go back to the 16th of January, and you can see what happened there. Okay, in other words, if the interest rate is obviously the Turkish Lira as a currency had a huge interest rate and it was very attractive. Hence the swap rate being so high. It has been cut down considerably. So if you go to here, for example, and look at the interest rates, you'll find out pretty quickly that the interest rate has not been as well valued as before. And you've got the inflation as well, which obviously has played a huge part in the devaluation of the lira. And you have to sort of take that into account as well, that the interest rate is only as good as the inflation, because that's the main thing. So that's where we're at. At the moment, we have to think about how we invest in a foreign currency like the Turkish Lira, looking at interest rate decisions, looking at the value that it offers historically as well, and also looking at how it correlates with the USD. Before this kind of new correlation started, because the two currency pairs are so different, you could sell Euro TRY, for example, in the period I described before, between August and November 2018, with the full knowledge that it didn't have any correlation to Euro USD. So if the Euro USD was fully rising then, and Euro TRY was fully depreciating, it wasn't like holding two different bets on a euro. There were two different entities. Now they are sort of streamlining. So it's interesting to see how much this will continue. This currency pair seems to be wanted to continue on, and the Euro USD, because it's so centrally regulated, or rather because the volumes are so high on both sides, it's unlikely to continue appreciating in a straight line like this. So that's the end of my rather long video today, but I hope you enjoyed it, and I look forward to seeing you in my next.